Why US dollar is so strong? The economy's performance is at the heart of the decision to buy or sell dollars. A strong economy will attract investment from all over the world due to the perceived safety and the ability to achieve an acceptable rate of return on investment. Since investors always seek out the highest yield that is predictable or safe, an increase in investment, particularly from abroad, creates a strong capital accountant, a resulting high demand for dollars. On the other hand, American consumption that results in the importing of goods and services from other countries causes dollars to flow out of the country. If our imports are greater than our exports, we will have a deficit in our current account. With a strong economy, a country can attract foreign capital to offset the trade deficit. That allows the US to continue its role as the consumption engine that fuels all of the world economies. From a currency trading standpoint, when it comes to taking a position in the dollar, the trader needs to assess these different factors that affect the value of the dollar to try to determine a direction or trend. Supply and demand factors, sentiment and market psychology, and technical factors. Supply and demand factors. When the US exports products or services, it creates a demand for dollars because customers need to pay for goods and services in dollars. Therefore, they will have to convert their local currency into dollars by selling their own currency to buy dollars to make the payment. In addition, when the US government or large American corporations issue bonds to raise capital that are then purchased by foreign investors, those payments will also have to be made in dollars. Sentiment and market psychology. In the case that the US economy weakens and consumption slows due to increasing unemployment, for instance, the US is confronted with the possibility of a sell-off, which could come in the form of returning the cash from the sale of bonds or stocks in order to return to their local currency. When foreign investors buy back their local currency, it has a dampening effect on the dollar. Technical factors. Traders are tasked with gauging whether the supply of dollars will be greater or less than the demand for dollars. To help us determine this, we need to pay attention to any news or events that may impact the dollar's value. This includes the release of various government statistics, such as payroll data, GDP data, and other economic information that can help us to determine whether there is strength or weakness in the economy. Traders typically adopt some combination methods we outlined above to make their buy or sell decisions. The art of trading exists in stacking the odds, in the form of a congruence in the three methodologies, in your favor and building an edge. If the probability of being correct is high, the trader will assume the risk of entering the market and managing their hypothesis accordingly. Thanks for watching the video. If you liked it, make sure you hit the like button and follow us for more content. Similarly, call us to get the best rates on foreign currency exchange.